Hello, everyone. Welcome back to the TQQQ Challenge channel. It's the evening of March 21st, 2025. Let's dive into the latest developments and see how our journey toward financial growth is progressing. Currently, TQQQ is trading around $62, significantly down from last month's level of $90. On December 16, 2024, TQQQ hit an all-time high of $93. After reaching that peak, it dipped to $73 on January 13, 2025, before rebounding to $91 on February 18. However, over the past month, TQQQ plunged to $57 on March 13. Since TQQQ tracks QQQ, it is essential to analyze QQQ's performance as well. Over the past month, QQQ has experienced a sharp downturn. The Nasdaq is officially in correction territory, having lost more than 10% from its recent high. More specifically, QQQ, which tracks the Nasdaq 100, has declined about 14% from its peak price of $540 on February 19 to $466 on March 13. While this drop is significant, it remains within the bounds of a correction rather than a bear market, which is typically defined as a decline of 20% or more from recent highs. The last bear market occurred in 2022, and while we are not at that level yet, all potential outcomes must be considered. In previous videos, we discussed that QQQ has broken below the 200-day simple moving average (SMA 200) green line for the first time since the Golden Cross of March 2023. Historically, this SMA 200 line has acted as strong support during upward market trends. Over the past 2 years since the Golden Cross of March 2023, there were two corrections where QQQ approached this line. The first was in October 2023, when QQQ nearly touched the SMA 200 and quickly rebounded. The second occurred in August 2024, when QQQ briefly touched the SMA 200 before rebounding again. This time, however, QQQ has broken below the SMA 200, which raises important questions about what might happen next. Based on historical patterns, there are three possible scenarios moving forward. The first scenario is based on the period between 2010 and 2016 when QQQ dipped below the SMA 200 briefly about once a year before recovering relatively quickly. These dips were short-lived and did not cause severe long-term damage. If history repeats itself, QQQ may rebound within weeks or months without entering a bear market. The second scenario is more severe and mirrors the COVID-19 market crash of March 2020. During that period, QQQ fell well below the SMA 200, experiencing a steep 31% decline from February to March. However, this drop was followed by a strong recovery, with QQQ climbing back above the SMA 200 just 1 month later, on April 7, 2020. What followed was a massive rally, with QQQ delivering strong bullish performance for the next 9 months. In this case, while the decline was sharp, the rebound was even stronger. The third scenario resembles what happened in 2022. That year, QQQ fell below the SMA 200 green line on January 21, 2022, and attempted to break back above it multiple times. The first attempt occurred on February 2, 2022, when QQQ briefly moved above the SMA 200 green line before falling below it again. The second attempt happened on February 9, 2022, but once again, QQQ failed to stay above the line. The final attempt took place on March 29, 2022, before QQQ ultimately continued its downward trajectory. After these failed attempts, QQQ entered a prolonged drawdown, falling 33% over the next 10 months, marking one of the worst declines in recent history. It was not until January 27, 2023, that QQQ finally broke above the SMA 200 green line again, and from that point forward, it used the SMA 200 green line as a support line, successfully bouncing off it on March 2, 2023 and again on March 13, 2023. The SMA 200 green line has been a strong support level for the past 2 years, but that changed on March 10, 2025, when QQQ plunged below it. The key question now is whether QQQ will be able to reclaim this level in the coming weeks or months. Another historical example worth mentioning is the market correction of 2018, which lasted from October to December. That 3-month period was exceptionally challenging as it coincided with President Trump's tariff war with China, causing economic uncertainty and a significant stock market decline. I remember how tough it was as QQQ lost 25%, falling from 188 on October 1, 2018, to 142 on December 24, 2018. That Christmas was unlike any other, with the market experiencing a death cross on December 3, 2018. However, following Christmas, QQQ began to recover, and by April 2, 2019, it had formed a golden cross. At that time, I was holding several 3x ETFs, including UPRO, FNGU, TQQQ, and TECL. Despite the downturn, I held onto all my shares and survived the 2018 winter without selling a single ETF. The main question now is whether 2025 will experience a bear market similar to 2018. I believe the likelihood is low because of a key difference between the 2 years. In 2018, the Federal Reserve was actively raising interest rates, contributing to market instability. However, in 2025, the Fed is slowly lowering rates. FedWatch anticipates that the Fed will lower rates twice this year, an improvement from earlier projections of only one rate cut. Regarding the broader market, a report from March 19 indicates that the Federal Reserve has revised its economic projections for 2025. The expected GDP growth rate has been lowered from 2.1% to 1.7%. Inflation is now forecasted to rise to 2.7%, exceeding the Fed's 2% target, and unemployment is projected to increase to 4.4%. These revisions reflect heightened uncertainty in the economic outlook, influenced by tariffs and policy changes. While the Fed has kept its benchmark interest rate unchanged, it anticipates 2 rate cuts later this year. A report from today mentioned that U.S. stocks climbed into positive territory on Friday as investors weighed mixed messages from the Federal Reserve, while President Trump signaled flexibility regarding a reciprocal tariff plan set for April 2. The S&P 500 ended its 4-week losing streak, marking a turnaround in another turbulent week for Wall Street. Despite ongoing volatility, the index managed to recover, showcasing resilience amid uncertainty. Historically, April has been one of the strongest months for the stock market. It is the second best month of the year, after July. The S&P 500 has shown an average return of approximately 1.38% during this month, highlighting April as a favorable period for market performance. There is a possibility that in April 2025, the Fed may signal a rate cut coming in June. Let's read another article from March 14, titled "The Stock Market Tends to Rally Big After a Correction." The S&P 500 has entered correction territory, dropping 10% from its February peak due to concerns over tariffs, inflation, and economic uncertainty. This marks one of the fastest corrections since 1950. Historically, corrections often lead to recoveries, with the market averaging a 5% gain over 6 months and more than 15% in a year. However, ongoing tariff disputes and inflation fears continue to weigh on investor sentiment. Now, let's review my portfolio's performance this month. Since the last update, I have accumulated more TQQQ shares. Several limit orders I placed at prices near the SMA 200 line were all filled, including purchases at $68, $70, $71, $72, and $74. Since TQQQ plunged further below the SMA 200, I continued buying shares, adding a total of 50 shares since the last update. Here are my recent TQQQ purchases since the last TQQQ video. 2 shares at $71, limit order placed on January 12, filled on February 27. 2 shares at $70, limit order placed on January 12, filled on March 3. 2 shares at $68, limit order placed on January 12, filled on March 4. 4 shares at $74, limit order placed on January 27, filled on February 27. 4 shares at $72, limit order placed on January 27, filled on February 27. 10 shares at $69, limit order placed on February 27, filled on March 3. 4 shares at $64, limit order placed on March 3, filled on March 7. 4 shares at $65, limit order placed on March 3, filled on March 7. 2 shares at $66, limit order placed on March 6, filled on March 6. 4 shares at $62, limit order placed on March 7, filled on March 10. 4 shares at $60, limit order placed on March 10th, filled on March 10th. For shares at $59, limit order placed on March 10th, filled on March 10th. For shares at $58, limit order placed on March 12th, filled on March 13th. I have also placed 2 more limit orders, which have not been filled yet. For shares at $57 on March 12th. For shares at $56 on March 13th. My total holdings have increased from 204 shares to 254 shares, with an average cost per share of $64.74. My TQQQ portfolio is currently worth $15,800, reflecting a 3% total loss or $600. Last month, my portfolio was up 39%, with a $5,100 gain. More details on last month's performance can be found in my February 2025 video. I have not sold any shares and do not plan to unless a significant market crash appears imminent. If you're curious about timing market downturns, check out my videos. 1. 10-year minus 3-month spread, recession indicator. 2. How to predict the stock market. I plan to invest another $12,000 over the next 12 months, mirroring my investments from the previous year. Our long-term commitment to the TQQQ challenge remains unchanged, investing $360,000 over 30-plus years to build a multi-million-dollar portfolio. For more insights on this strategy, watch my video, Cash vs. SPY vs. QQQ vs. QLD vs. TQQQ, 30-year showdown. Here are the principles guiding our strategy. 1. Monthly investment, consistently investing $1,000 in TQQQ each month. 2. Enhanced dollar cost averaging, EDCA, allocating more funds during market dips and scaling back during peaks. 3. Sell before crashes, selling only when significant crash indicators emerge, with plans to reinvest after the dip. 4. No margin, avoiding the risks of borrowing money for trading, staying within personal financial limits. The market continues to evolve rapidly, fueled by AI and technological innovation. Staying disciplined and focused on long-term goals will be key to success. As we continue this challenge, I'm excited to see how our portfolio grows and look forward to sharing this journey with all of you. Thank you for tuning into this month's update. If you enjoyed this video, please like, subscribe, and hit the notification bell to stay updated. Your engagement and support make this challenge even more rewarding. Take care, and I'll see you next month. Happy investing!